All right. Okay, very well. So, um, welcome back. So let us continue. Um, one, we're talking about duration, okay? And duration. So from the question we're solving, the question C of in that question speaks about duration. He said, question C, he said, calculate the duration of each bond. What does duration measure? So I have explained what duration measures. Okay, let us um, go back. Now, in calculating duration, all right, like I said, like I said, we have to follow like 4 steps to calculating um, duration. So step one, so let us talk about the um, bond A's duration. So step one, bond A, calculation of duration. Calculation of duration. So bond A, for bond A. So it says the first step is to establish the cash flows arising from the bond. Year one, year two. Year one, year two. Now, what are the cash flows? In bond A, the cash flows are 100 in year one, 1,180 in year two, because redemption is 1,080 and the coupon for year two is 100 now. So 1,080 plus 100, that is 1,180. Then the discount factor, is going to be 10.1%, because for bond A, the YTM of bond A, for bond A, YTM is 10.1%. Market value of bond A, the market value of bond A is 1,054. Okay, so those are the information we are going to need. Okay, what is the present value factor? 1.101 raised to power minus 1 times, that is 0.908, and so on, multiply by 100, got 91. So that is our PV. That is our PV. Okay. That is our PV. Now, we are going to have for year two 1.101 raised to power minus 2 times, that is 0.825 times 1,180. Okay, that is 973. Add everything together. 973 plus 91, 1,000 164, a bit close to the market value of the debt. Okay, now, then the next step after calculating the PV is calculation of proportion. Proportion of PV to market value. So proportion of PV to market value in year 1, 91 divided by market value, 1054. The proportion is 0.086 for year 2. PV 973 divided by 1054, 0.923. Then now say multiply proportion by time, because 0.086 times 1, that is 0.086. 0.923 times 2, 1.846, add plus 0.086. I got 1.932. So that is the duration. Okay, I'll now say therefore bond A duration is equal to 1.932 years. Okay, that is the duration for bond A. Okay, let's move ahead for bond B quickly. Bond B duration. Bond B duration. I'm leaving B out. Okay, bond B, duration of bond B. Okay, very well. Okay, so bond B duration, we have year 1, 2, 3. Establish the cash flow, which is the first step. Year 1 is 120. Year 2 is 120. Year 3 is 1,120. 120 for 3 years. Then year 3, 1,000 is redemption. Then what is the discount factor? This one will be 10.2%. That is the yield. Okay. The YTM is 10.2%. 10.2%. Market value is 1026. It's 1026. Okay, so what do we have? We have 1.102 raised to power minus 1. 1.102 raised to power minus 2. 1.102 raised to power minus 3. 0.102 raised to power minus 1 times 120. We have our PV. PV would be 109, approximately 109. Then 1.102 2 raised to power minus 2. We have times 120. So our PV would be 999 in year 2. In year 3, we have 1.102 raised to power minus 3 times 1,120. That is 83837. Approximately 837. Okay, you add it together. We have 837 plus 109 plus 99, 1045. So close to 1026. Okay, let's move on. So the next step is to calculate proportion. Proportion. Okay, PV to market value. So in year 1, we have 109 divided by 1026, 0.106. 99 divided by 1026, 0.096. Okay, 837 divided by 837 divided by 1026, 0.816. Okay, this is 0.106. This is multiply 0.996 times 120 times 2, 0.192, 0.816 times 3, 2.448. Okay, bond B duration 2.448 plus 0.192 plus 106.106. It is equal to 2.746 years. 2.746 years. So that is the bond duration. In the other time, in the second video, I guess, when we're solving question A, I think they also said how many bond would can Kazure buy. So for bond A, let's quickly do that one. For bond A, number of bonds Kazure Limited can buy in bond A. How many can they buy? Which is going to be, they have 20 million naira. Bond A1 is 1,054. So how many bonds can they buy? 20 million. 1,054, which is equal to 18,975 bonds. For bond B, number of bond B is equal to 20 million divided by 1026. So 19,493 bonds. Okay, bonds. Okay, so that's the number of bonds. This should have been part of question A. All right. So we can see how to calculate bond duration now. In year one, we got 1.932 years. For year two, we got 2.746 years. So you can see they are not up to maturity dates. Okay, so um, very well. Please, like I said, the assignments, that I recommended, please try it. May 2016 question 3, Skylet Limited. Please look for it. Please try it. All right. Then see all the three there: bond duration, market value of bonds, and so on. Okay. All right. I will see you in the next video. So we are going to talk about next in the next video. We are going to talk about convertible debts, convertible bond, convertible debenture, and so on. All right. Before we move out of debt. All right. Thank you. Good luck. All right. Take care. Bye.